morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, August 8th. Okay, job numbers came out. They really liked the job number, although if you dissect the number wasn't anything of significance. But again, it's not what the number is, it's how the markets react to it, and the markets broke out of that consolidation range. One day doesn't make a trend, so we see today and tomorrow is going to be really key and pivotal on what's happening with the markets moving forward. So we're going to go through the dollar. I want to go through bonds. I want to go over the indices and, of course, gold as well as the miners, just to see where we are with this. I think that there's a big question mark on when the Fed's going to raise rates, and I just think that I don't see that happening. Central banks around the world are cutting rates, and I know we are the best economy out there right now, technically, which I don't believe, but so they say. I just think that I really don't think they're going to cut rates anymore this year. If they do, maybe December, but I don't think that would happen either, because we have a new president coming in November. So I think they're going to stay put the rest of the year. And I do think that bonds are at a peak right now. Interest rates are at lows, and I think they'll stay. I think the low is in interest rates. Let's put it that way. The 10-year. If you look at the 10-year, I'm not showing that to you today only because I have a lot of charts to go over. But I think that the dollar is going to rise. I don't think the dollar will sell off. You could see that every time it sells off, it gets well bid up again. And we're making higher highs and higher lows here. You could see that just by me making a little trend line. You could see that here. Okay, higher highs and higher lows. So I think that that the dollar can really muster up a little bit of some buying, and we take out that swing high, then I do think that we're probably off to the races in the dollar. That would put significant pressure on commodity sector and stocks as well. So something to keep an eye on the dollar, but I just wanted to go over that with you right now. We do need to take out this swing high, but if that does happen, I think you could see a really good big move in a dollar, and actually at one point hurt stocks as well. Let's go over silver real quick. You see that we have our double top here. I have put a Fibonacci retracement because this is so true here, the 38%. It's going to really be that first target. That first target is at 38%, and then, of course, the 50 and then the 61.8% way down there. And I think it's going to happen. I think you're going to get down here before we go higher. I think you move lower before we go up in silver and precious metals. I do think that it's in a second stage bull market, but I do think that it's a little time for a break. And you can see here we've all more than doubled in the miners. And let me just open that up to you. These are valid support, guys. 38% right up in here. That coincides nicely with that uptrend line. You can see that horizontal trend line. That uptrend trend line. Okay, and then you got the 50 and the 61.8% retracement right here. I don't know if it's going to get that far, but remember, there's a big gap area that actually could get filled, which coincides nicely with the Fibonacci retracements. You can see that here. 23, the 38, the 50 lines up perfectly on these open gaps, and 61.8%. So these are the targets that I'm looking for. As you can see, momentum is waning. You could see that we have a lower high from this previous high marked with this arrow, and you can see same thing here curling back down again in our MACD. So they're not as strong as the rally is not as strong as it was in this particular instance back in early July. Okay, now let's take a look at our gold GLD, and the same goes for gold. It's this repetitive patterns here. You could see that we're much lower than where we were, and this is something that I like to see on daily charts. So we had a big move up here, but look what's happening. Momentum is waning. You could see that momentum is not as strong as it was on this big push. So I'm looking for gap fills. 38% was probably going to be the first area, and then we got this huge gap fill back in here. There's a double top, beautiful double top. You can see that here, and this measures all the way down to that close to the 76.8% retracement. So right in between the 61.8 and 76. That to me is a fantastic target to start looking to buy gold again. I wouldn't touch it up here, guys. If anything, I'm a better seller in gold. Let's take a look at TLT Bonds. This is the ETF for the bonds, and you can see here we had a beautiful M formation, and I laid out a Fibonacci retracements from this low to this high, this extreme. And you could see where these are 23%, And you can see these are really big areas. When they line up with price, it's really really important. You can see that here, 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 and there's that gap. So the ultimate target for TLT would be 136, and that's what I'm looking for. So I'm looking to short any rallies in TLT again, provided that we have a nice big move in the yields. Okay, now let's get back to the VIX, and I mentioned extreme complacency. You could see here, guys, that we are now 950. We're probably, I think that in the pre-market, this VXX, the ETF was at 935. Extremely, extremely a low end of its range. I think it's the lowest it's been this year, and we have extreme complacency here measured by the volatility VIX, which is below 12, and the VXX is below 10. So you might get an 8 handle print at one point, but I wouldn't count this out, guys. Once you get a couple of days of volatility, I think you're going to have a big move up, and I think easy 13, 14, 15 up in these areas is where you'll see the VXX at one point. Spiders, wanted to show you here, 217.50, 214.50. Now you have double support in this area. Fibonacci retracement. I do think ultimately you're going to see 210. Obviously, we don't know when, but you could see that momentum is definitely waning from the last push up that we had. So there's very little volume on this move up, and some of my signals in my trading model are still on sell signals. So we'll see what happens the next day or two. Again, remember, one day does not make a trend. So I just want to show you the 60-minute lower lows, lower highs. We did break out here, and remember, consolidating the upper end of the range is bullish, but we need to see this thing pull back in, fill the gap, and then move higher. And then I would say, yes, you probably move up a little bit more before we start to move lower. Transports did well on Friday, but so did everything, and it is still below this downtrend line and this horizontal area of resistance, which is extremely reliable, and it has been on the breakdown and on the break back up again. But we need to really take out this pivotal high here, 144.40, to see us start moving higher, and that would help, of course, the bullish case when you have the transports participating in a rally. IWM, a secondary leader, you could see here it also took out its consolidation, made all-time highs, and now you could see here Bollinger Bands are pinching. But again, look at the oscillators. They're not really, if you have a strong trend, RSI would be at or near 80, and it's not. It's way below it. So something just to keep an eye on. Does it mean you short the rally up here? No. That means that you look to buy dips until it doesn't work anymore. But be careful, and you want to use tight stops. And here's the same thing with the Qs. Q's starting to break out. On our premium video, guys, we put out exactly levels like this, actionable trading areas that you would put on your charts, and you would look to either buy on a pullback, or if this was broken, now obviously this becomes resistance. So you mark on your charts and you just trade those levels. You don't have to worry about it. There's no second guessing. It's pretty dynamic. You take a look at it. Go onto our website, tradingmarkettechnicals.com. All right, guys, have a great day today. Make some money, and we'll see you tomorrow. Take care.